Hello and welcome to this introductory video on break-even analysis. So first of all, we're going to go through the formulae. So contribution per unit is equivalent to the selling price take away the variable costs. The break-even point in the number of units is your fixed costs over contribution per unit. So that's basically the number of units you have to sell to cover your costs. Now your break-even revenue is the break-even number of units times the selling price per unit. Now margin of safety, that's your sales volume, take away the break-even volume, which is the sales amount, take away your break-even amount. That's equivalent to the current output, take away your break-even output over your current output. So that's your formula for margin of safety. Now, a target profit. So you want to know how many units are required to meet the target profit. It's your fixed costs plus your target profit over your contribution per unit. And finally, the contribution to sales ratio is the contribution over your selling price. Now this is a break-even chart here. So the vertical axis is the revenue and the horizontal axis at the bottom is the output. Now the blue line is the income. The red line going across horizontally are your fixed costs. And the brownish line going diagonally are your total costs. Where the total costs are equal to your income, that's your break-even point. So the number of units will be down the bottom and the costs and the revenue will be on the vertical axis. Now the difference between the total costs and your fixed costs, that's your variable costs. Right, let's look at a question now. Let's have a quick look at this example. So in this example we've got, let's do it, sells a pair of trainers for £125. The variable cost per pair of trainers is £45 and fixed costs are £32,000. Well, we've got 6 things to do. So number 1, calculate the contribution per pair of trainers. Number 2, calculate the number of pairs of trainers to be sold so as to break even. Number 3, calculate the required revenue to break even. Number 4, calculate the margin of safety if 520 trainers are sold. Number 5, calculate the margin of safety as a percentage. And finally, number 6, prepare a marginal costing statement to calculate the profit if 600 pairs of trainers are sold, showing the contribution and profit. So let me just check the spelling there for statement. Okay, right, so your solution then. Your contribution per pair of trainers as your selling price, take away variable cost per unit. So back to the question. Selling price per pair of trainers is £125. That's 125. The variable costs we were told are £45. So therefore, our contribution per pair of trainers is £125. Take away the £45 variable costs. Now the break-even quantity is your fixed costs over contribution per unit. Contribution per unit we just worked out is £80. So that's the £80 on the bottom. Now the fixed costs, again we need to go back to the question. The fixed costs, there they are £32,000. So it's £32,000 over £80, and 32,000 divided by £80 is 400. So now that is going to be the number of units we require to break even. So it's 400 units. So it's 400 units we require to break even. And the break-even revenue is the break-even quantity. We've just worked out as 400 times the selling price. Go back to the question. That was £125. So we have 400 units times £125, which is £50,000. So basically you've got to sell 400 units to break even. And in terms of revenue, that's £50,000. So our sales need to be £50,000 in order to break even. So cover others to cover our total costs. Margin of safety is just sales volume, take away the break-even volume. Break-even volume we worked out in part 2 was 400 units. And the sales volume is given to us in the questions of part 4 is 520 trainers. So for the margin of safety, is the difference between the sales volume and the break-even volume. So that's going to be 120 pairs of trainers. So let's get rid of these currency symbols. So the margin of safety, they're selling 120 pairs of trainers more than they need to in order to break even. Now the margin of safety as a percentage is the current output, which we were told was 520 pairs of trainers. There we go in question part 4. The break-even output we worked out was 400 units over the current output, which is your 520 units. Then times by 100 to convert it to a percentage. So 520 take away 400 is 120 over 520. Again, let's get rid of these currency symbols. And it's going to be then times 100. So that's 120 times 100 and divided by 520. And that's going to come to 2 decimal places. That'll be 23.08%. Now, part 6, prepare a marginal statement, costing statement to account the profit if 600 pairs of trainers are sold, showing the contribution and profit. Now, so this is one of the ways of doing it. So the sales revenue is going to be 600 units times 125 per unit. So in other words, it's going to be 600 pairs of trainers times £125, which gives us £75,000. The variable costs are £45 per pair of trainers. So it's going to equal to 600 times £45. That's 27,000. So the contribution is your sales revenue. This is your total contribution. Take away your variable cost, your total variable cost is £48,000. Now we need to take away the fixed costs now to work out the profit. So the fixed costs, we were told in the question, here are £32,000. So we've got £32,000. So the profit is your total contribution of £48,000. Take away your fixed costs of £32,000. Now, to a shortcut to this, we could have just done a bit at the bottom, the contribution, fixed costs, and profit. So to work out a total contribution, we could have done, let me just go back, our contribution per unit was £80, and we're selling 600 pairs of shoes, trainers. So it'd be 600 times 80, and that will give us the £48,000. Then you can have the £32,000 fixed costs and a profit of £16,000. So thank you for watching this video on an introduction to break-even analysis.